Since penny stocks carry a high level of risk, you should always conduct your own research to make sure that the stocks and businesses fit into your risk management strategy. Then, we'll discuss some more specialized stocks, but these will be companies with better fundamentals. So instead of these risky penny companies, we're going to look at some supercharged technology firms to purchase right now, which will be a little safer and have greater upside potential. Welcome to our channel, Finance Experts. Let's dive in. Number 1. Skillz Inc. In simple terms, Skillz is a mobile gaming firm where you may get paid to compete against other people. Because they generated incredibly amazing revenue and profitability for their most recent earnings report, Skillz has recently seen a rise in stock price from its recent lows. It was so fantastic, in fact, that the CEO even went on to say that the business is making good headway in strengthening management and the board of directors with top-tier professionals who will allow it to carry out the strategic plan to achieve growth over time while marching to profitability. And also said, "We continue to innovate on our platform and look forward to reaping the benefits from this work during 2023. Overall, Skillz wants to build an even more amazing management team to capitalize on the recent momentum that has been boosting the share price as a result of their most recent earnings report." Financial institutions like Wedbush underlined their belief that Skillz is going to beat other firms in their own field and set a $2 price goal for this specific company. Accordingly, Skillz has a growth rate of over 100%, which implies that over the span of the following 12 months, your investment in Skillz could more than double. We also notice insiders purchasing this business, which indicates that insiders are increasing their investment in the stock's future because they think it will rise in value above its current price. For this reason, the CEO in particular purchased 1.5 million shares at an average cost of 54 cents to 57 cents. Therefore, feel free to look at Skillz if you believe that this business could rise from roughly 50 cents up to $2, providing you with a significant growth runway. Number 2. LifeWallet. LifeWallet is one of the top firms for recovering Medicare, Medicaid, commercial, and secondary payer reimbursements, and their stock price has recently been on the rise as well. In fact, the chief information officer of the company even stated that by developing new solutions for healthcare providers at the point of care through innovative technology, we are delivering much-needed resources to eliminate inefficiency and lost money while improving patient care through increased accuracy and accessibility. This month, the company announced a significant enhancement to its overall LifeWallet platform. People now have control over their medical data, which benefits patients, healthcare providers, and payers alike. In other words, they are being extremely innovative and expanding the overall platform's possibilities. The LIFW share price is currently 85 cents per share, but many analysts think it might rise as high as $3. Number 3. Minim Inc. The company develops home networking equipment and is expected to have significant growth in the technology sector. In order for your home's gadgets to communicate with one another and provide customers with smooth access, they essentially want them all to be connected to the same network. The business also sells goods and software under the MOTOROLA name, and recently, the market for home networking has seen tremendous growth. For instance, the CEO stated that there is a realizable chance to capture extra value at $50 million in yearly revenue and a market cap of less than $5 million or 0.1 times sales. He is essentially suggesting that the company is well positioned for future development because its shares are currently trading at such a low price and it is earning 10 times as much money as its market valuation. Currently trading at 11 cents per share, they are expected to climb to 35 cents per share by the end of the year, providing investors with an increase of threefold. The company's overall share price will rise, which could give the stock price more momentum. However, after that, I predict short sellers will try to exploit this by driving the stock price of the company back down to a penny stock. In any case, we'll just have to wait and see in that regard. This reverse stock split will go into effect on April 17th, so please be aware of that date as well as the risks that may occur. Number 4. Stronghold Digital Mining Inc. This company mines cryptocurrencies, making this a great time for buying as the price of cryptocurrencies begins to rise. This company sets itself apart from other cryptocurrency mining firms because they mine cryptocurrencies like Bitcoin in a way that protects the environment. However, this company is attempting to use a green way to mine these types of assets. The best part is that following its most recent earnings report, the company started to rally because they beat sales by bringing in $23.4 million worth of revenue. Normally, other institutions use high amounts of energy that are not the most environmentally efficient or friendly, and they place a significant strain on the overall grid. This company mines cryptocurrencies, making this a great time for buying as the price of cryptocurrencies begins to rise. Because of this, some industry experts have jumped to the conclusion that the company, which is currently only trading at 88 cents per share, may be worth between $1 and $2. So, if you support cryptocurrencies, feel free to purchase this stock in the meantime. However, always keep in mind that singular risky penny stocks are extremely risky, so be sure to conduct your own research and speak with a personal financial advisor before purchasing any stocks. Now let's move on to some of the companies that have better buying opportunities because they are more stable even though they are singular risky growth companies. Number 1. CrowdStrike. This business focuses on cybersecurity, and it leads its industry. Organizations will require greater cybersecurity protection as different businesses grow more technologically advanced and shift to a more digitally first approach to conducting business because a breach might result in a damaged brand, a significant loss of clients and consumers, as well as an enormous bill to pay. Currently, the share price of this company is $137, but if this seems too expensive to you, check to see if your platform has share slices or fractional shares allowed, which would allow you to invest in this business for as little as $1. Experts estimate this company's value to be between $173 and $385, therefore there is a significant upside for this business. Number 2. DigitalOcean. This is a cloud computing organization. Since almost all businesses are adopting cloud computing, this organization, DigitalOcean, has a large market opportunity. Currently, DigitalOcean, represented by the ticker DOCN, projects a $98 billion market opportunity, which is projected to rise to $195 billion by 2026, indicating a large growth opportunity for the company. Currently, shares are only trading for $36 per share, but analysts estimate that over the next 12 months, the firm will be worth a minimum of $40 and a maximum of $63 per share. With a market price of only $4 billion, the firm also managed to post very outstanding revenue growth of 36%. Revenue growth over a 30% CAGR is particularly impressive for growth companies like DigitalOcean. Number 3. The Trade Desk. The majority of this company's revenue will come from advertising, and at the moment, advertisers aren't content with just placing random ads on websites or videos. Instead, they want to target particular audiences and groups of people in order to maximize the return on their overall marketing expenses and investments. The Trade Desk ticker symbol TTD is presently selling for $61, but I believe that when the company's share price declines, it could really rise and rebound to $90 over the following few years. Like the other firms on this list, the company has very sound financials. The trading desk is increasing its sales by 24% and has very good earnings of 14 cents per share. The trading desk has a huge growth potential inside the enormous advertising business. Thanks for being to the end of the video. Don't forget to like, share, subscribe, and tell us what you think about this video below in the comment section. Let's meet again with another useful video.